The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and my pleasure to be here on October the 29th. And just another day, 2 days to go, and that's it with October. The worst month, people kept saying, worst month, but in fact, very often Octobers are fantastic. You make a low in October, and then there's a V-shaped recovery. In this particular instance, we're looking at something a little different. In October, we've got the October the 8th low with a V-shaped recovery from the September 18th high of 15,709 in the Dow. This is the 14th session. The 14th session was in fact top back at a peak G, a rare peak G at 15,709 on the 18th of September. I said to my subscribers today that this is going to be very important. The doji candle means nothing until the very next candle. In fact, remember, anytime you're looking at bars or candles, there is no implicit, and there's no implication. There is nothing deep down in that says, this is fantastic, the next bar has to be up or has to be down. What happens is if there's a certain occurrence that is commensurate with the candle's implications from the day before, it's a confirmation. So what I said to my subscribers today, my opening calls, my daily newsletter, is that what happens over the next 2 to 3 sessions is very important based on the doji candle, because if the doji from yesterday, perfect little plus sign we had yesterday, absolute indecision, neither bulls nor bears were winning, almost 0% change in the Dow. My understanding of the methodology, certainly the way I use it of candles, is that if you get a doji candle, the next 2 consecutive closes out of 3 bars essentially gives you a very good feeling for whether there's a continuation pattern occurring or whether it's going to be a reversal pattern. So the previous day's highs and lows, that's what you're going to focus on, and I gave that to my subscribers in my overview this morning, and exactly what you can expect if certain things happen and why they should occur. Now, all of this is essentially, in terms of analysis, is just built on years and years and years of trading and position playing, trying to articulate as much as possible verbally every single day since the 1980s. Every single day I've given a market call, even when I'm out the country in Australia or wherever it is. I've tried my very best to be there to give a daily call and at least to keep up my newsletter. And with that in mind, there are certain characteristics that I love to look at. And one of the characteristics is what happens at a particular price point. And this is the only reason why I really add the technicals, when I talk about technicals, I'm talking about the MACD, the slow stochastic, and the 9-period moving average. What happens at that particular point? Does it look like there's, in sentiment and in every other way, that we're about to reverse down or about to reverse up? Or are the technicals saying, don't get confused, there's nothing happening, there's no change of trend yet. There could be real soon, but as of now, there isn't a trend change. And that's really very important as far as I'm concerned. It's one of the reasons why I love to teach my courses, why every day in my newsletter I give a lot of information about the Chapman wave, about what we're looking at, show the charts of things that we have. One of the reasons why we've been only long up until now is you want to trade the trend. In this case, the trend is up, decisively up. You want to change your buying when the trend turns down, and then you want to be looking at shorts. Higher highs and higher lows is bull market action lower lows and lower highs, bear market. But it can take you 4 or 5 bars before you get that feeling. So even to the downside, we have to wait for a couple of things to happen. Meanwhile, back at the ranch, the Dow is up 51 at 15,620. The S&P is up 463 at 1766. The comp index is up only 2 at 39.42. One of the reasons is Apple is pulling back. It's down $3 at 526. We'll look into that in a moment. You've got gold down only $3.50 after this really strong move. So I'm looking at gold and I'm saying gold essentially has been in a bear market in the short to medium term, and in the longer term, there are no signs yet that that bear market label can be changed. In the weekly chart, there is a sign that a counter-trend rally is possible. Well, it's actually happening right now. And in the daily, we're looking at a divergence between the GLD, which is in leg D, possibly making a peak D today, and the GCZ, the December contract, as making a possible peak C. So that says there's still a little bit of room to go on the upside. But I consider this to be a counter-trend rally. In the daily, not so, because the daily is acting very well, and it should lead to the weekly going somewhat higher to make the arch that goes to the H that goes to an M pattern. That's my thinking. Now, when I look at, I had a question. Oh, let me just finish this. The silver is up 3 cents at 22.57. Platinum's up at 14.71, up 80 cents. High-grade copper back to the 3.29 area, up 2 cents. Crude oil stuck in that 98 range. And bonds are down 4/30 seconds at 135.03. Dollar's up 0.07, and the euro, I believe, is up a tad, up 0.002. Now, this is, to me, very important. This is what I send my subscribers every day. There's this opening paragraph here. This is from this morning, from yesterday's close. Then I add a whole chunk of information to it, plus my overview section, which has the same thing, notation on it. And then, let me show you right here. Let me move this away. Like that. This is the 120-minute chart that I'm showing with an up channel holding the 9-period moving average of the diamonds. And here is the Dow. So I put in the patterns, and it's for the price to not confirm the pattern, to break away. And my question has been, will this area here, very often what happens is you get between, I wonder if I can do this now. I'm going to give it a try. There. You get between the Dow 120-minute chart and the VIX, the volatility index 120-minute chart. Very often you can get mirror images. And my question has been, are we going to see another mirror image with this portion in the Dow 15,400 to 15,300, maybe even 15,200, be filled at some point? And will the VIX index fill that space into the 16s? However, the VIX is actually just stuck in this range. It's at 13.35. That is buying intensity. That's buying pressure as far as I'm concerned. And within that context, oops, let me see if I'm going to do the right thing here. Yes. Within that context, you've gone to a leg E now in the 120-minute chart of the Dow. And that leg E is getting closer and closer to where? It's at 15,625 right now, with a high of 15,633 today. It's getting closer to the 15,709 previous left side all-time high. And the S&P has gone to 1768. It is at all-time highs. And this pattern that I call the cup and ladle breakout, which the S&P did, which normally can take you to an A, to a B, to a C, and even a D. Right now it's an E/B. If I've got an alternate wave count, I'm not sure I can wait this long above all-time high is above the 1729's previous high of August. Was it August or September? September. I'm beginning to think this has to be leg B, and we've still got a pullback and a couple of bounces to go to new all-time highs in the S&P, and the Dow will play catch-up over the coming, what's today, Tuesday? Maybe over the coming week, maybe into early next week. with that said, let's do a couple of things. I had a very good question in the den. Peaky said, let's see. Let's see. I always have. Okay, I'm going to get there. The question was, I saw it earlier on. Trying to read it right here. And Basil, what determines an A- on the Chapman wave? I always get confused. Let me just show you this on Apple. Apple made a low, AAPL, trading at 526 down, 47 down 363. On the 17th of September, Apple started a rally that went straight up, and it went just about to the, this is another technique that I use, the inside track resistance, and it pulled back from 496.91 in 1, 2, 3, 4, 5 sessions. And then what it did is it bounced, but it bounced underneath that previous high of 496.91. So that to me says I've got to count each successively higher peak. There are certain peaks that are counted, and then there are certain peaks that are negated. In this case, that A- is still active. But then what happened is Apple went to 492.35, pulled back for a day to 478.60, and then broke above the 492.35 level to go to 492.65 on the 7th of October, being repelled momentarily from the downtrend line, that inside track. This is in the Chapman wave methodology, the inside track. I'm giving a course, an all-day webinar on the Friday a week from this Friday, all day, 9 o'clock till 4:30, 7.5 hours. And it's going to be, to my way of thinking, I always consider they are always very important. This one is probably one of the most important I've ever had, in the sense that I'm going to be really specific, because if you sign up for it, you're going to get my CD introducing the Chapman wave methodology. It's a $249 value for free. I'm also going to, in that webinar, which is archived, so that if you can't be there that day, you can archive it, and you've got 30 days to look at it as many times, whatever segments you want. It's included in the price, and the price is normally $795. It's brought down to $595, got an early bird special. And one of the things that you get included with the CD is a month of my newsletter service, the opening call. That's $128 value. Now, let me just tell you what we're going to be looking at. We're going to be looking at just this, the buy signal that can then be upgraded to a buy mode. But within the buy signal, sometimes there's a pullback, and I like to be as conservative as possible, and I'll explain. While that becomes an A-, and that becomes the new B, and leg C starts, and Apple is now in leg E, about to take a breather for a couple of...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors, such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, talking about this. Really, it's going to be such a focused webinar coming up. There are very few people that have ever done my webinar who don't look at charts these days and say, peak A, peak B. They label it's just so easy to do. They just label each successively higher peak and lower trough. And one of the things that you can do is you just got to be aware that at peak D, that's where you can. You don't have to, but that's where the most likely scenario is D or E, where you're going to get some kind of a pretty good pullback. And if you don't get that and it recycles higher from peak D within 2 to 3 bars, that's very positive. So look at this. Apple goes up in a single leg A, and then it pulls back modestly to where the 200-period exponential moving average. I'm going to show all of these. I had a lovely email from one of my subscribers talking about, what does John talk about? He says, let's see. I love to have the 200-day SMA, that's a simple moving average, and the 200-day EMA on the same chart. Stocks often chatter back and forth between them before a breakout. I love that expression. That's beautiful. They chatter. That's exactly what happens. They kind of bounce around. So now let me show you what happens with Apple. Single leg A to the upside. Pulls back to the 9-period exponential moving average, just dips just briefly. It chatters between the 9 EMA and the 200 EMA. And then, let me get rid of this because I wanted to show the gaps that were forming, that were potentially forming, and now we can get rid of it. Right. Now look at this. the reason why that becomes an A minus is because I want to be as conservative as possible. So the pullback towards that 200-period moving average of that doji candle says the stochastic and MACD are acting very well. If I get an A, a peak A, underneath the previous A, and then a peak B, underneath the previous high, in this case the high of 496.91, and this B is at 492.65, I want to get to D as soon as possible. That way I'm not surprised. It took me years, years, and a lot of charts, and sometimes a lot of money to figure that one out. But I finally figured out that you want to count every single peak. That's your only obligation. It's the easiest thing in the whole world. What more could there be to make things as easy as possible? So what happens is the moment that this, after B, there's a push above 496.91, that'll start leg C. I could call it B, but if I called it B, I might have been too late when I got to the top. In this case, I went to B, peak C at 528.45 on the 22nd of October, pulls back in one big swoop to the downside. Next day closes an inside bar, and then it goes to D, pulls back within the inside bar again. And what happens, you get that spike up this morning after the earnings report last night, and it pops up to 539.25. I'm calling this E for now. I might be able to recycle higher, but at least I'm calling it E for now. I want to be very clear. And that E says there's a real good chance that if within another 2-3 sessions, Apple closes underneath 518. It's at 526 right now. Now, there's no guarantee it'll do that, but it's somewhere around 518. It'll test 514.50, which is a critical support level, but there's a real good chance that the MACD will turn down. It might not cross negative, but it'll turn down. And the stochastic is still at 90%. It's very strong. I have two indicators that are saying within 3 sessions, there's a real good chance that Apple will start to pull back and hold to the downside rather than be going up much higher. So, Peaky, the answer is I want to get the peaks done as clearly and as quickly as possible. Let's just say that there wasn't that peak there, and I got right here to C, and then Apple pulled back very sharply. Because I would be waiting A, B, C. If I didn't get that D, I would have been stuck. But all the technicals were saying there should be somewhat of a pullback. So it's just to be as far advanced in the waveform as you can get. Now look at this. Here's the Apple 120-minute chart. From the trough on the 9th of October at 478.28, you go peak A, B, C, D. There's a technique that I teach which is called the instant restart. In my CD introducing the Chapman methodology, the instant restart is a really important technique. We'll get there later in the session, but I will introduce it, and this is what it looks like. It looks like this, where there's a peak D, and within that D, very quickly, you break out to a new high. I call that using alternate wave count, and that can take you all the way to another peak D. It's a very bullish thing, and that's what happened to Apple. They went to another D, E, F, pulls back, and I'll be right back after these messages with Kurt in Portland.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Second, then we're going to go to our callers, APL. So what's happened is there was this incredibly ugly bar of the 22nd of October, opens at 528.25, goes fractionally higher to 528.45, slides all the way down to 508.03, closes at 518.35. That was on the 22nd. Then it starts a brand new peak A, B, C, D, E, pulls back with a down arrow because the MACD and stochastic were fading, and then you get the right arm extend. This is what I call a rogue wave. Today's open, a rogue wave opens at 536.27, goes to 539.25, and right now it's trading down 5.5 at 524.34. That is a perfect example of a Chapman wave. I'll talk about it later on if I get a chance. Rogue wave. It has all the characteristics, and I'm going to explain what happens, why it happens. And I can't always say why it happens, but how it usually happens. And we're going to go to our first caller. We've got Kurt in Portland, Oregon. Hi, Kurt. How are you?
Hey, I'm great, Basil. Thanks for taking my call. And I just have to say one thing. You guys all at TFNN are some seriously smart dudes.
Well, thank you very much. I do appreciate that. I think we all appreciate that. Thank you.
Yes. Hey, my question's about Corning Inc. It's GLW is the ticker symbol, and I just wanted to get your perspective on the stock. I do have to tell you, I think tomorrow they report earnings, though.
Did they not report earnings just a few days ago? What was that spike all about?
Well, okay, so when I did my research, they signed this agreement with Samsung Electronics.
That's right.
And they did announce, they did a little pre-announcement that I think they said, they didn't say, I don't know if it was they're going to beat earnings or that they're, but that they were going to at least maybe meet the analyst expectations.
Okay, now I remember the stock back in 2000, where it was trading at 113.33. I'm almost sure that it split very soon after the top. I think it was up in the 226. It might even have been a 3-for-1 or whatever. It was an amazing stock. Now, are these the guys in Canada?
No. These guys produce that, Gorilla Glass. It's that scratch.
Yeah, the Gorilla Glass. I thought they were headquartered at some point in was it GLW? I thought it was GLW. Anyway, I remember this, and actually I don't remember why. I thought it was with this company. There was a guy who used to come on from Canada. The CEO used to wear a little blue beret on his head, like the old French, the artistes. I'll never forget. My wife and I used to wear a beret when I lived in South Africa. I was an artiste at the time. I'd gone from commercial art, graphic design, to music, and we go to Paris in the early 70s during the riots there, and I'm the only guy in the whole of Paris who's wearing a beret. Nobody in France, or at least in Paris, was wearing a beret. JDSU is the one. That's it. Thank you very much, beret man. That's Zitao in the Den. I knew someone in the Den would give it. That was JDSU. Anyway, so we go to Paris, and I was the only one, and everybody kept asking me for directions. Of course, my French was, there was no French at all, but it was interesting. So that's the guy with the beret. So GLW as the Gorilla Glass, and that's one of the reasons why they've got this fantastic, it seems like it's a fantastic contract with Samsung. And Samsung, I must tell you, I was at a Verizon store about 3 months ago. I've got my same old Droid. I got it. It was fairly new at the time. Droid had just come out, and I had it. It's one of the bigger ones. The batteries, the battery's not very good. It's a little clumsy. It doesn't, I've never really got into it. It does the job. Anyway, this guy's showing me. Then he shows me the Samsung, and the Samsung had this, there were icons. There were these little, a million things. You could have, they do everything. So they're very different to Apple in some ways. They're very different. Now that they've got this this Gorilla Glass, I think that in terms of the durability and everything of the instrument, that's probably going to be a very good thing for both of them. Now, let me ask you a question. Do you have any GLW at all?
No, but I'm thinking about starting a position. And,
okay. So let me just go through this. Based on the Chapman wave methodology, this is what I've got. On the daily chart, from the low of the 3rd of September at $13.84, that was the start of a move with the stochastic and the MACD. The on-balance volume took a long time. It only really picked up when GLW, Corning, went from trading down. It closed at some point at 1548. That broke the peak B. That was peak C. And it stopped at 1807, and it's having a high-level consolidation. Now, I have a way of either trading these or teaching them in my classes, because they are really important patterns that if you understand them, there's a chance you could actually have a very nice trade, but you've got to treat it as a trade, because when you get a gap up like this, until the high bar, which is what we can call now a flag, is pierced, there's a certain pattern that I look for, and it's a certain pattern that I spend a lot of time on, usually in my level 2 courses, for those who are already very used to my my methodology. Now, earnings come out for GLW, as I say, tomorrow, pre-market at 10:30. It's always difficult, just as with Apple. Let's just say you hadn't traded Apple last night, and you wanted to trade it this morning because it sounded so great. You would have bought at the opening within, just points of the high, and now it's pulling back, and that's a tough position to be in. Let's just say you had bought yesterday, and instead of gapping up, everything was done pre-market. It had its spike, but by the time it opened this morning, whereas it was down 13, 14, 15 points pre-market, and then went all the way back up to about +8. What if it did that all pre-market, and by the time it opened this morning, it was down, and now you're actually down as well, as if you'd bought it this morning, but not as much. So the whole question is, what do you do when earnings come out? I have a philosophy. One is, we have a stock that we've held today, into today. Earnings came out, but I've liked this stock a lot, and we bought it lower down. I lowered the stop on the stock to just a few pennies profit, so that at least we broke even. But so far, that stock is holding beautifully, which is telling me that whatever happens, I think there's still an earnings report at 3 o'clock today. I think that's the case. I don't usually follow that too intensely because I really like to look at the stock and let the stock tell me what it should be doing, and then we see what the report has. But in this particular instance, so far it's holding well. In this case, this is what I'm suspecting. I could, in fact, use what I call a phantom peak for the parallel high of $14.50 on the 5th of September, and the parallel high of the 6th of September, and the breakout the next day. That would be okay because there was a sign within it that said, on a shorter-term basis, I think even the 120-minute chart said, you could have considered that would have been a peak, but it wasn't. You can call it a phantom peak, and that would have taken me to a peak D right now, which has a little bit less of an implication because C says I should still go to D. I want to be as conservative as possible. So I'm going to move the A here. It's all within the parameters and everything I discussed in the Chapman wave methodology. There's nothing here that's fuzzy. It's just a simple question of, once again, trying to get to a peak D legitimately as quickly as possible. Now that I've got peak D there, it says to me, I can look at the 120-minute chart, and within the 120-minute chart, there could be what I call an inside buy signal. And because of that, it says that we've got a little mini peak A minus that failed, another peak A minus that failed. None of them have broken the 1673 low bar of the 23rd. And it says within it, you've got a peak A and a B now, a brand new one. If there is a move in the next 120-minute bar after this one, above 1755, that'll be C. That can take you all the way close to, exactly to, or just above in the 120-minute chart, the peak F top, which is absolutely legitimate. That's peak F, which says, be careful. You can get time and price, which is what we've got. It says, this is the moment of truth, because if it breaks above and closes above $18.07, the daily chart, if it's today, it won't be it'll continue leg D. If it's tomorrow, that'll be the official leg D. So here's what I'm thinking. Because there's a risk that if it gaps down, it'll fill some of the gap towards the 1550 area. After all, they could come out with great news, but we're only looking at this as in the future, GLW will be linked to Samsung. It hasn't happened by tomorrow, by this afternoon, by the earnings, right? So we've got to look at what we've got. I think this is a really good-looking stock. I wanted it in my opening call for my subscribers, but it never gave me a chance. It just moved so quickly. I liked it down in the 1450 area. By the time it moved the other day, it was just too quick. I'm waiting for a pullback because it's leg C in the monthly chart. And if the leg C holds $16.21 at the end of by Wednesday afternoon, tomorrow afternoon, that's the end of October, that's very positive. It says that in November, there might be a test of the 16s because there might be a peak C, but if it moves 1 penny above 18.07, that extends leg C. I like this stock. The big thing is, how do I tell you to get in when there's a risk of a fabulous move to the upside into the $18.50, $19 area if everything's just really going well, which it looks like it is from the chart pattern? But what happens if I say buy it here or nibble here and then it drops down to the 15s? It means that you're kind of stuck because you have to wait for a period of consolidation before you can get back to start that leg D. So here I'm going to do. This is my thinking right now. I don't know your time frame. If you've got a much longer time frame, then I'm going to make a suggestion that says start the smallest position at $17.31 right now. But that is like, if you were going to say, I don't know how many you'd be buying, but let's just say you're going to buy 200. I'd buy 20 or 25 right now. If it drops 1.5 points or 2 points, it's just not a big deal. Nobody likes to lose money, but this is your pilot light indicator, because this is going to tell you that if it drops, hits the 1653 area, which is the 9-period exponential moving average, and then bounces back into this rectangle formation between 1807 and, I wrote it down here, between 1807 and 1673, that's very good action. If it breaks down and starts to fall between 1673 and 1525, that's the gap from the other day, then you're in the position, but it's going to tell you over the next week whether or not this is a legitimate breakout to the upside and whether GLW is actually going to continue the upside momentum. And then I would add on in increments as it goes slightly higher, not lower, but slightly higher. So I'm going to make the suggestion. I'm going to see that we've got what happens tomorrow during the earnings report. But my suspicion is what time parameters were you looking at? And your voice told me that you were looking at this as a potential intermediate term buy. That's 6 weeks to 2 months or longer. Would that be correct?
That's correct. Yes, I was actually the amount of shares I was originally thinking about buying was like 500 shares.
Okay, so then let me make this suggestion. I would like you to think about it. Just don't jump into it. There's a whole day. You're going to have plenty of time to do this. You could even do it tomorrow after the news. But I'm going to make the suggestion here that you nibble on a position. Even though there's the gap, and even though there's a 1.5 to even maybe 2 points to the downside from where it is right now, the momentum of the upside in the MACD and the stochastic and the monthly, as well as the slow build-up, except for this past spike, but the slow build-up in the weekly says to me that GLW has the potential to make a cup formation and to try to tackle at some point in the next 2 months the 18.5 to the downtrend line at 19.36, that downtrend line. And that could happen over 6 weeks to 8 weeks. If I'm wrong, I think that's fine. I'm going to suggest take a small, I'm still going to say 25 or maybe 30 shares. Just start your position. You're going to have plenty of time to add to it if it's successful, and if it's not, you'll be able to get this. Will be your pilot light indicator. We'll look at it again maybe Friday or Monday, okay?
Hey, thanks a lot.
Thank you very much, Kurt, and good luck with the trade. I think it's going to work out. Folks, we'll be right back. Dow's at 52.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, Basil Chapman, Tech Technicians Hour in the den. Question is CCMI, Cummins engine, or Cummins Inc., has just tanked, and is that a kind of a sign for the market? Well, it's a very special thing because the Cummins says, I believe that they have the natural gas engines, just a big deal there, and I'm not sure exactly what the issue is, but let me show you something about the Chapman Wave methodology. In the methodology that I teach, counting peaks is absolutely essential. You want to go from a peak A to a peak B to a peak C and then a peak D. And at peak D, you've got to be careful because that's where it can, but it doesn't have to. But that's where you can expect the potential for a much deeper pullback. Look, Cummins engine made its low on the 13th of July at 80-20. It goes to peak A on the 24th of August. It pulls back. It goes to peak B. That's also an A, but that's an overlapping wave. So that's an A and that's an A. So B goes, moment it breaks above 105.63, it goes to B. On the 21st of October, CMI is the symbol. Then it goes to C. Then it goes to D, and it goes to D on the 8th of February. It pulls back trough A, trough B, trough C, trough D. You can get the troughs on the way down, and very often a D is where you want to see. Is that the potential now for a turnaround? In this case, it is. And it goes peak A, peak B, peak C, and yesterday it makes leg D with a kind of a doji candle with a high of 139.17. And at 139.17, what happens is it opens today at 135.63. It's trading now down 11.93 at down 8.80%. Something must have happened out there. That's the weekly chart. But look at the monthly chart. Here's your trough. Right on the 200 period moving. I'm going to show you all these techniques. Some of them you don't even have to know the Chapman wave methodology. You just have to be able to identify certain parameters or moving averages. It hits it twice. Then it rallies peak A from November, the week of the 28th of 2008. And it goes from $70.70 and it goes peak A, B, C, D. The D is October of 2009, 4 years ago, at 51.65. It has two inside bars, and then it breaks out. Well, that's E/A. That's the overlap. That is the technique I was just talking to you about, the instant restart. If you can learn these techniques, some of them are they're very simple in concept, and actually, I have to tell you, if you stick with them, they're simple in implementation. When you make them complicated, that's when it gets complicated. But look, it goes D, E/A, F/B, G/C, pulls back sharply on May of 2011, 121.49, pulls back, makes a cup formation, the right arm extension with the failing technicals of the MACD and stochastic, makes a doji top at D, March of 2012 at 129.51, pulls back, and there's that inside buy signal, which goes peak A. That's a gray A because it's underneath the previous high. Peak B, it's underneath the previous high, and then it breaks out to E/C. So we don't know, because it's made a new high in October, whether November is going to be lower to make this a peak C, but we're looking at the stochastic turning down from 86%, and the MACD wasn't nearly as strong. So this could be a fairly serious time and price pullback in Cummins using just the technique I discussed. Look at the daily. The daily goes to the where? Peak D, and the peak D at 1. Oh, that's the end of the show. Well, Cummins is pulling back, demonstrates perfectly the Chapman wave methodology. Folks, please check it out. Go to the front page of TFNN. I know that you will get incredible information. You'll get information that's going to absolutely help you in all your positions, as well as you might have funds. You might want to know what's happening in the markets. That's what we deal with every single day. Have a great day. Listen to the Options Show, and I'll be back with Tom later this afternoon.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.